Good morning, everybody. Very happy to be here and to discuss our results from last year. If you're not already familiar, Corero is a leading provider and a very strong, challenging provider of distributed denial of service attacks solutions. So we provide a market with software and hardware for companies to make sure that their service can be available through cyber attacks. It's an incredibly fast-growing and important industry, and our solutions are tailored, much like the way that software is on your phone, tailored to be automated and intelligently delivered to very large service providers. And we make key partnerships with strategic companies, most notably Akamai and Juniper and GTT, where we go to market with them. Most of our customers are very large communications and service providers around the world who have need to actually either resell or protect their own infrastructure. We have most of our offices and employees are either in the UK or the US, where we have rather large offices in Boston and Edinburgh, and our headquarters is right here in London. We're on 2 exchanges, both the AIM and the US OTCQB. We've had quite a year of progress in 2023 with lots of impressive news with impressive forward momentum. In fact, we believe we're taking market share in this industry. We've secured a very large relationship with Akamai, one of the world's largest IT service providers, which has a name brand, who uses our technology exclusively, but for both infrastructure protection and for reselling the solution to their customer base. I was secured last year in the fourth quarter as a new CEO, coming from the industry where I led, marshaled, and ran the largest provider of these services, these DDoS services over at Radware. We've also revamped our whole product portfolio, really transitioning it from largely hardware to now largely software. You can kind of view it like a transition from your phone, where you have pictures were typically on cameras, and you can still do that, but now you can actually largely have cameras on your phone as software. Very analogous situation. For a rather small company, we've been securing million-dollar contracts. We have a beautiful contract coming out of Brazil with Tech Enabler, and we're moving the company largely now into a subscription-based or ARR kind of business. With that, I'll hand it on over to Phil to talk through some of the high-level numbers.
Thanks, Carl. Yeah, we'll go into these in a little bit more detail, a touch later on in the presentation, but here's an overview of the business in terms of the key metrics that we measure ourselves by. So revenue was up 11% year on year at 22.3 million. Adjusted EBITDA at 2.2 million, our ARR 16.9 million, and our gross margin was at 90%. And that's where when Carl was talking about where our movement towards being a software business, this is where you can see this coming into our margin as well. Our customer renewal rate remains very high at 97%. We have about 80 people worldwide and a very significant global footprint across many different countries, helped by the partnerships that Carl's been talking about also. So if we look at the investment case and why us and why now? Well, it's a massive market. We've got a 3.6 billion addressable market as we calculate it, and it's growing at a significant pace. The DDoS threat is not going away. If anything, it's increasing, both in numeracy and complexity in the current environment. We have a next generation market leading disruptive technology, and we believe we're at the forefront of this technology, and we are streets ahead of our competitors in this front, and we continue to remain to invest in this to ensure that we remain there as well. We have significantly enhanced unique capability compared to the competition. We have an extremely strong customer service department as well, which is one of our key differentiators. And we have a very experienced management team that have extensive knowledge of the market, and bringing on Carl is just the latest addition with this as well, and bringing even more expertise into the company. We continue to invest in R&D, as I said, to make sure that we continue to maintain our capability compared to the competition and grow with the market as well. And Carl mentioned the launch of Smart Wall 1 and 12.0 is just the latest examples of how we're investing in R&D and the new products we're bringing to play. And we also recently mentioned we had the DDoS intelligence function, which is another product we're delighted to be bringing into the market that's just been released recently. We're continually looking to grow our channel partner footprint, Akamai being the latest example of this, but by no means the last, and that's great to have someone of such significance coming on board. You know, Akamai did extensive DD before they partnered with us, and that's just a demonstration of just how good our technology is. And it also gives us such a more significant reach globally as well, using people like Akamai as partners. And Carl's going to talk about this as well, but really, you know, availability is fundamental for all businesses. You can't get away from it, no matter what industry, what business you're in. Service availability, uptime, no disruption is absolutely crucial. And that's where our solution offers the essential protection against this.
Let's talk a little bit about these attacks and the nature of these attacks. Said simply, these attacks of today's DDoS or availability-based cyber attacks are not your father's or grandfather's attacks of yesteryear. The attackers have gone, like every other category of cyber attacks, to become more sophisticated and more commercialized with the way that they bring to market these capabilities. So much so that they have been building products that are essentially akin to weapons that can be used by folks who can buy them, who want to harm, that don't need to know that much about how to use them, other than they can click and they can actually cause a lot of harm. On the presentation, we have examples of 3 kinds of bots that have been produced like a commercial entity to be able to do great harm to companies, and often are done so either for commercial reasons, in other words, ransom or ransoming, or for other kinds of harm, trying to delay or deny the victim's capabilities. So the first one is a bot that's been around for a while and continues to evolve, called the Bricker bot. The design of this bot is simply to make your IT devices no longer eligible to be functional. So once this bot is unleashed on specific kinds of equipment, the equipment actually gets what they call bricked, or no longer available to be restarted. It's a pretty frightening bot, and it's the kind of bot that has just a one victim problem. Essentially, once you're victimized, you're done. These kinds of categorical DDoS or DOS attacks are really heinous. Mirai is a very interesting one that is essentially a portfolio of weapons that are given in a software package to be able to elect different attack techniques and see which one meets your fancy for effect. And then the third one, Hajime, is one that likely nobody has heard of on this call. It is actually the largest botnet in the world by most estimates. And nobody really knows what its intent is because it hasn't been known yet, but it continues to grow. And the feeling is that this one day will become a very large, capable botnet to be purchased by somebody. These are the kinds of things that we protect against. Next slide. And we do that essentially by maintaining an algorithms of knowing how to characterize various forms of attacks and then know how to neutralize them in the best possible way. And we provide many different options on those in an automated fashion. And generally speaking, the way that these attacks work is to have an imbalance between a request or a reply, or a resource exhaustion. I'm sure we can all be familiar with traffic on the streets or traffic on the metro or the tubes. It's a very similar situation. If you just have too many requests and very little reply or capability to reply on your system, you will essentially start to deny the system. And that's how most of these work. And we know how to characterize malicious traffic and filter that traffic, much the way that your water company would filter bad particulates in the water. Next slide. So this, not unlike the water company, this kinds of sets of technology require both detection and mitigation and different kinds of responses and the different kinds of filtering. And we come to market with all possibilities and with many unique possibilities. And one of the most unique pieces of what we do is that we don't require you to necessarily change any of your hardware, but we can magically, through the use of an app or software, be able to transition your existing IT infrastructure to reasonable scrubbing solutions, if not fantastic scrubbing solutions, saving you often half of the price and allowing you for much more flexibility in the way that you operate today. So as a result, we offer cloud-based, hybrid-based, premise-based technologies, both in software and hardware, and we ship around the world. In this model, we can offer both CapEx and OpEx-friendly solutions to customers or a combination thereof. And we can do this all in a managed format, which is also very unique to us. So we can manage your premise-based devices fully. We can manage your business in this solution. So we can offer managed services providers strong revenue solutions with not a lot of onboarding cost, where we can be complete turnkey. And of course, the more we do, the more revenue we reap. Next slide. As a result of the compelling solutions that we bring to market and the powerful uniqueness that we display, along with the next generation capabilities to be husband very close to your IT infrastructure, your software, your hardware, your solution, your app, we've been the provider of choice to many partners around the world that use us exclusively in this solution set. And you can see a great representative sample of these folks around the world. We make now markets across the globe, and we provide great services in various different languages and various different formats for customers that actually have uniqueness inside of many of the geographies that we operate.
Thanks, Carl. So we talked through the numbers in a little bit more detail. So as I mentioned previously, revenue is up 22.3 million. That's up from 20.1 in 2022. Our ARR is up to 16.9 million, and that's got a steady CAGR for the last 5 years of 24%. I'll talk about that next slide as well. Gross margins are up to 90%, again, through the transition from hardware more to the software-based solution. Our net cash position has never been better. We were cash generative during the year, to the tune of 0.8 million. We paid 0.8 million. We paid down all of our debts, so we are fully debt-free. We have cash generation, and the balance sheet is looking at an extremely healthy position. Our adjusted EBITDA, we adjust out for an intercompany loan, which actually we will no longer adjust out for following this year because that intercompany loan has now been paid down. So hopefully the volatility due to FX will be going from 2024 onwards. But our adjusted EBITDA was 2.2 million, up 29% from last year, from the 2022 numbers, which was 1.7 million. And we made a small loss before and after tax of 0.2 million. So what do we measure ourselves on? What are our key financial metrics? Well, the main one for us is ARR. That's the underlying revenue generation. And as you can see, it's been going up at a very impressive rate year on year. We're up to 16.9 million as of the 1st of January 2024, the CAGR of 24% I mentioned before over the last 5 years. And that's extremely significant for us because this gives us an extremely predictable revenue source. You're almost at a position where you're very close to covering the cost base just from ARR alone, let alone any net new growth as well. And with our very high customer retention rate of 97%, this is only set to grow further and further. And relationships like Akamai and things like that, where this is a DDoS, a DDoS as a service solution. This means that we're only increasing our ARR when we sign on partners like that as well. Talked about this as well, cash generative, debt-free, with a very strong year-end cash balance that we're taking into the new year. And so this is a little bit of dicing up our revenue. Where do we derive our revenues from? Now, the US is a significant component of our revenue. It was 71% this year, 67% last year as well. The UK and the rest of the world hasn't grown as much as we would have hoped, and that's certainly an area of focus for us to go forwards on as well, to make sure that that share increases and that we are significantly investing into that side of things as well as the US. And that's about 30% of our business. If you look at our revenue by category, the DDPS, pure DDPS, so software as a service, is about a quarter of our revenue, slightly up from last year. We're continuing to evolve down that model as well. We have software license and appliance revenue and maintenance and support, and they're pretty equal between the two of them, 37 and 38%. And that is where we sell the appliance first of all, and then we obviously offer maintenance and services going on throughout the period of the contract, and that's the recurring revenue part of that contract as well.
So in the strategy and outlook, essentially what we are focused on is the continuation of having the marketplace understand us as a viable, very fresh, new, technologically unique, differentiated product in the marketplace. Whereas we are a relatively low market share provider today, we intend to be a very fresh, competitive challenger brand going forward. We kind of think of ourselves like a Tesla or a Dyson, whereby we're disruptive with our technology and we're going after installed, complex and old brands. And that's where our marketing and our sales initiatives are targeted. And we believe that those messages and that key narrative will resonate strongly in the marketplace as we move forward. We also are taking on strong partnerships and alliances as we've already demonstrated, but that's just the first tranche in what will be, we think, many different very powerful partnerships as we move forward. As we think that most partners will want to have our technology in their portfolio for sale. We are having an expanding upsell opportunity within our install base as we continue to grow this business, and we have happy customers who are retained. We intend to continue to sell more to them as they grow, and we intend to expand our product portfolio that will give us yet even more opportunities to sell happy customers, happy technology that provides great value proposition. And of course, we want to continue to grow our customer success, our customer delight program, so that we keep and renew customers at an ever-increasing rate. We believe we're significantly differentiated in the marketplace with the way that we go to market, delighting our customers, and we will continue to invest against that. So how's it going so far? We believe that we're off to a strong start into this year, that we believe that the market continues to resonate to us, with us, for us, and we believe that we're taking share. We believe that the 2024's buying behavior and habits and the complexity of the threat market and the threat, the geopolitics of the threat environment is leading more and more companies to either have to, through insurance or compliance reasons, pick a solution in this space or upgrade and renew their portfolio to more advanced and fresh solutions. And we are experiencing very strong growth against that marketplace. We don't see the market slowing down, and we don't see our business not being incredibly competitive in the marketplace. In addition, we have been expanding our footprint, providing for more consumption in different areas of our solutions. And Ingecom, a great reseller in the European marketplace, has come to our market in the Italian marketplace. And you probably caught the news that we've actually listed on the US markets in the OTCQB venture market. And we actually now are listed in that market under DDoSF. And that started in this most recent quarter. And our pipeline is already being delivered against. I think you should expect to hear more news against that. We believe that we're reaching high watermarks on many different of our revenue pistons, and the demand continues to be very strong across our market. So I want to thank you for this morning. I want to thank you for listening in, and we look forward to any conversations that we'll have going forward and to fielding your questions.
In terms of the partnerships, Can you give us a little bit more detail on Akamai and how it's going? And also expand on the process in terms of acquiring new partnerships and what traction you are seeing there.
Yeah, sure. The Akamai relationship I would characterize as both incredibly healthy, robust, and productive, both in terms of sales and the worth that we drive into their portfolio. We find our pipeline with them increasing handsomely, in orders of double or triple digits in those numbers. And we expect the contribution from their partnership to be really handsome this year, without a doubt. And I believe that there'll be yet even more news in the year around that we will be able to release and shed more light on. In terms of other partnerships, the portfolio of opportunity is great. The pipeline of conversations that we're having are impressive. Most of them are brand names that you would come to know. And like all these partnerships, they come with a certain degree of uniqueness, and like a marriage. And we're working through those. But I think you'll hear partnerships in categories you didn't expect from technology providers that aren't necessarily people that you would expect to reach to a solution like this. And then you'll have other partnerships which are par for the course that are coming down. Our key is on this to be able to extend our brand into and through, so sell through many of the companies that actually have a need to sell this to their customers. So as a result of companies like Juniper and GTT and Akamai, you find that more and more interest is coming to Corero on how to do this. Revenue is key for many service providers, and recognizing that we're a revenue-friendly company, that we can provide quick revenue to a managed service offer with very little cost is quite attractive. So we have many, many prospects.
Okay, that probably leads quite neatly into another question in terms of global growth. You've highlighted at the end there that while the US has continued to grow well, perhaps growth in the UK and the rest of the world had not been perhaps what you had hoped. In terms of acquiring new partners, is that going to be pivotal in driving growth in those new regions?
Yes, we have a three-pronged strategy around that. On the first part, our growth internationally has been within our levels of acceptance. Our focus has been the US, and I think most people would acknowledge that if you can compete in the US, which is by most estimates, the most competitive market in the world, if you can compete there, you could probably compete anywhere. And as a result of our impressive performance over the last couple of years, and we continue to execute very handsomely in the US, we are now using and leveraging our partners that have both language and cultural skills locally to be able to sell through. So that's the first strategy. The second strategy is we have put Corero employees in each region, which is a net new strategy, and we will be closer to the time zones, closer to the cultures, and closer to the execution as a result of the employees at Corero. And the third strategy, as you suggest, is taking very strong regional partners. It's one of the reasons why we helped show some of the partnerships that we already have in market and will continue to have in market. Those partners will be the de facto distribution arm for us as we move forward.
Okay, thank you. Perhaps we could loop back on Akamai. What has been the feedback on Corero's offering from sales staff at Akamai? And where do they see potential, and what concerns have they raised?
Yeah, I think it would be a great question for them to field, but from our perspective, we've heard really resoundingly great conversations and feedback back. As I mentioned, we are multifaceted with Akamai, and we are the only DDoS provider, technology provider that they use in their company throughout their entire portfolio. So we provide both infrastructure protection as well as the ability to actually offer the technology for them to use in their DDoS service offerings, of which they are multifaceted. And they use us in all forms, in all solutions related to DDoS. And we have had high performance customers with resounding success in their portfolio. We also go to market with them in trade shows and in also on sales calls directly, where we help support their overlay infrastructure. And we have a high working relationship, and I would characterize it not just daily, but hourly.
Okay, thank you. How much operating leverage should we see going forward, and what do you believe is your long-term margin potential?
You want to take that one?
Yeah, so you know, we will continue to invest. There's no doubt about it. You know, for us, we need to make sure that we're maintaining cutting edge technologies I was talking about before. So there will be that continued investment. However, we are absolutely actively looking to increase our margin going forwards as well. So where we see our revenue growth, our OpEx growth will not be at the same level as our revenue growth. So the operating margin, I expect to increase by a few points every year, because that is definitely something we're looking at. However, we will not be, you know, sort of stifling product innovation for the sake of margin. So there's a healthy balance between the two, but the operating margin is something that we certainly see will be improving in 2024 going forwards as well.
Okay, thank you. To your point there that you won't be stifling growth, there's a couple of questions we've got here around both expanding your R&D teams, and also you spoke about expanding your product portfolio. You know, does that mean M&A? So perhaps you could talk about how you plan to grow the product portfolio.
Yes, so it's great. Great questions. We see ourselves as offering solutions and being focused around this problem of availability. Availability to us is akin to oxygen to humans. Without it, businesses can't survive. They simply can't operate. They will suffer, if not die, without the attribute of availability. The availability problem and conundrum continues to evolve with technology, and that evolution requires more and more product solutions, technology solutions. We are at the forefront and continue to pervade the forefront and be the top of the pick list for technology for the next generational problems on availability. So great examples there are service plane failures. In the world of IT managed service providers and cloud service providers, the way that they get their businesses done largely is through orchestration and automation solutions. They essentially take the people and the decisions out of the process. And AI and machine learning are all part of those decision makings. Unfortunately, AI and machine learning themselves sometimes turn into automated stupidity, or through no mistakes of their own, or they're attacked. So we see an ever increasing evolution in the availability threat that needs protection in asymmetric ways. And we intend to bring very, very innovative solutions to the marketplace to be able to address those. Yes, there will always be a buy versus build decision. That's part of those decision-making matrices. And yes, R&D will have to have an expansion in terms of both capability and mindset, algorithmic engineers and so forth. And we're on top of all of those in terms of both geography and both in terms of capabilities.
Okay, thank you. What are your gross and net customer retention ratios?
Take that one.
Yeah, sure. So I mean, we talked about it earlier on, but our customer retention ratios at the moment, we 97% of our customers we retain year on year. We've retained them. That's been very high for a long time now, and that's because we have an excellent customer service. We have a very unique way of providing customer service, which is very bespoke, and our customers are extremely happy with both the customer service and the fact that the product just works, and we're cost effective. So we don't lose them. But as we were talking about before, one of our main focus is actually on upselling. So many of our customers grow with us, and this is not a number that we currently release in the market, but it's something we will be tracking going forwards regarding what does our net retention rate look like and how we upsell in those customer rates. So that is something we're looking to provide the market with in the future, but it's certainly a focus of ours, as Carl was talking about before. Revenue pillars and the revenue drivers, certainly one big one is, you know, upselling to our current install base and making sure they have the current solutions, but also we bring on customers that are growing, and that's the whole point, you know, and they're growing in complexity, they're growing geographically, and therefore we provide more solutions to them. And they also grow by way of volumetric traffic as well. So, you know, whereas last year we had the 100 gig, Then we want to look at the 400 gig and so on and so forth. So they're continually evolving. So, whilst we might retain 97% of our customers, probably the actual number in terms of revenue, which is what we're talking about looking at going forwards, is probably going to be above 100% of that.
Okay, thank you. The listing in the US, what is the rationale behind it, and are you still committed to London?
Yeah, so thank you for that question, Hannah, and from the audience. So the question really is around the availability of investment to our company, whereas we are committed to the London marketplace, to the London public market, and so forth. But there is a recognition and an acknowledgement that we have both UK-based employees as well as US-based employees. And the US marketplace is a difficult marketplace to invest in the AIM marketplace. And it was difficult for us to offer both capabilities to our employees in terms of investment strategies or incentive strategies, as well as, just simply said, it's very hard for US investors to actually make a market in our stock on the AIM. So we wanted to offer a portfolio of capability whereby an average person could sensibly make an investment in our company in their home geographies.
Thank you. What have we got here? What's your view on the company in terms of its ability to deliver a sustained profitability and then to announce dividends? I suppose I should point people in the direction of our research notes in terms of forecasts, but do you gentlemen want to add any more colour?
I'll start this and I want you to end that, Phil. How's the time? I feel very strong about our future. It's kind of like a shining capability up on a mountain. We've taken a little bit of time to find ourselves as a company, I think. But I believe now we know how to make markets, how to execute technology, how to be able to describe the technology, and how to be able to delight customers. And we intend to take those investments and those assets and grow upon them quite handsomely. Moreover, we have a compelling technology in a marketplace that is saturated with old and complex existing providers who have lost their way, both with their ability to delight a customer or to be able to offer a reasonable price and capability for the solution sets. Whereas we believe we're about 2 times the feature sets and about half the price in almost all circumstances. In addition, we think we offer a lighter portfolio and a more extensible automated solution set. So we're very excited about the company and the prospects. Just renewals alone in our market is about $500 million, we believe. Renewals from competing solutions. And if you take a look at the size of our company, that means that we can feed off of this addressable market for years with high growth rates, with existing budgets that are already going to competitors that we think we can actually grab. Good?
Thanks, Carl. Yeah, and as we were talking about before, that we are looking at the margins and making sure that we are providing sustainable growth as well, and that is then being reflected in the margin. So absolutely, profitability is key for us in cash generation. The dividend question is a bit early. That is certainly one that it's something that we're not looking at the moment, because we still need to make sure that we're growing at the right rate before we're looking at that. But certainly, it is noted in the back of our mind that that will always be a question.
Excellent. Well, and you made some good points there, Carl. And one question here is perhaps just a little bit more detail on the product. Lots of claims there that you're market leading. And so what features do you offer that others do not?
Yeah, great. So the market essentially has been characterized by 2 kinds of solutions for years. And these are solutions that, as you recall, I helped develop 10 years, 15 years ago in a competitor. And the solutions basically went something like this. If you want a filter, we can put something in line of your pipe, just like a water filter, and it will sit there in line in your pipe. It will do the detection, it will do the mitigation of the problem. If you don't like that solution, there's many reasons not to like that solution. If you can't do it, you don't want to do that solution, your other opportunity is to somehow do detection off of the traffic flow, and then move suspect traffic, either en masse or in part, to something that you call a scrubbing center. It's essentially another form of a filter, but you're diverting your traffic to a scrubbing center. These scrubbing centers can be done internally, externally. They can be owned by you. They can be purchased as a service outside. So that's been the OR scenario in this market for roughly 15 years. That's the old complex way of doing things. We offer those solutions also for many reasons. That's where the market is. In addition, we can provide you with an and solution. So you can do that and something else, or you can do that or something else, or you don't have to do either one of those things. Why? Because what we do is we offer nested husband, small footprint technology close to all of your flow sources, your traffic sources. And we know how to detect particulate problems very, very granularly in many different ways. That's the first product. That's a detection product. So we divorce our detection product and we offer it as a solution in the marketplace. That's not bespoke, but the way we do it is very unique. Second, we can magically, like your camera on your phone, transform your existing infrastructure into mitigators, whereas you don't need to buy or place scrubbers in front of your pipe or build scrubbing centers. This is an enormous cost and complexity benefit. There's a decreased complexity in rerouting traffic and rebringing in traffic and the problems associated with that, in addition to actually buying and onboarding fast scrubbers, which of course we also make. So how does it work? Our technology knows what kind of infrastructure you have in place and knows the vendor capability and can, at time of need, program those vendors, program your phone as an example, to actually take care of the problem that's transiting your network at that moment. So it's said simply, we can actually take your routers or your NICs or your switches and actually leverage them to actually characterize the threat problem and drop the threat problem at time of need, allowing you to make more of your infrastructure by having a great solution in place. This is a bespoke capability to us in the marketplace. It's not one that the big competitors can't do. However, should they be interested in moving into what we do today, it will take some time. There's a high bar of technology to overcome, and some of it is unique to us. But the most important part is that it's half the price than the existing competitors. So for them to move to us, they would have to acknowledge that their margins and their revenue will decrease for the foreseeable future. So it's a very formidable problem, business problem that they have. And it's a fantastic solution for us in renewal situations, as we can go in and offer twice the capability at half the price.
Which leads me on to another question. How easy is it then for the customer to switch to your solution?
It's as easy as a phone call.
Right. Okay. In terms of their back-end infrastructure.
We can take care of the whole solution for them. Because we manage it, it really is a phone call away. And if they want to do it themselves, there's some training and so forth involved. But it's I would call it a lot less complex and a lot easier to actually operate than anybody else in the marketplace. And that's measurable. And that's also, those are comments that we have from our existing testimonials from our existing base that have come from a competitor to us.
Okay. Is there any ability or appetite to switch the current license agreements over to the SaaS-based model going forward?
Yes, we already have many different models in place, and a SaaS model, we have SaaS-like models already in place. And as we continue to move towards more just simply cloud-delivered services, you should see us aggressively moving into that marketplace for sure.
Well, then that is it for the questions for today. Which just leaves me to thank you both, ask everyone who is listening in to respond to the feedback that we will send out, and thank you for joining us, and that we will hope to see you all in 6 months' time.
Thank you very much.
Thanks, everyone. Thank you, Hannah.
Thank you, Hannah.